The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the February 12th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a fabulous start of your day. Let's make sure that you and I, that we do everything we can to have a terrific and extraordinary Thursday. Of course, the easiest way to do that is to always remember that what's talked about is a dream. What's envisioned, well, that's darn right exciting. What's planned becomes possible, but here's the deal. What's scheduled is real. And I want to thank you for scheduling your time with me each and every morning. I'm grateful for your presence here, and I'm certainly here to service you. So however I can do that, feel free, email me, call me, whatever it is that I can do. You can always reach out to me at 877-927-6648. Internationally, you can also reach out to us at 727-445-1044. Remember, if you've got a question, I guarantee you one thing. There are many others that have got that exact same question. It's just the anxiety of calling into a radio show. I know I was going to tell that story. I didn't tell a story out there. I'm going to do that here this morning. So don't call in for me. Don't call in for yourself. Instead, call in for, that's right, call in for someone else. A random act of kindness. That's all that you've got to do. And that is the way to live. Now, this is Tiger Financial News Network. Of course, it is Terrific Thursday. I'm Steve Rhodes. Welcome to the show right now. The Dow is up 72 points, straight at 17,934. S&P right now is up 14 points at 2,082. Composite up 38 points at 4839. Russell 2000 is up 9.5 points at 1211. DAX up nearly 200 points. FTSE up 24 points. Gold is up $2. Silver is up $4. It's basically flat. Light sweet crude is up $1.38. Price line that's up dollar-wise $29, about 2.5%. TripAdvisor up 13%. Shire PLC up about 5%, up $11. Stamps.com up 15% this morning. International Flavors. I wonder what that is. I don't think that's a Baskin & Robbins or anything. You've got Concho Resources up $5. Tesla leading the charge. The downside off $14. Panera Bread down $14. Baidu off about $14. Treehouse Foods down $8.50. Bungie jumping. Bunge Limited off $6 and change. Cheesecake Factory down $6. Zulily off $5. Tesoro Corp down $5. But let's start off by taking a look at what's going on inside of the index ETFs out here. Let's start off by taking a look at what's going on inside of the Dow Diamonds. Dow Diamonds right now, they've got 13 million shares. 13 million shares. Well, that's the weekly chart. What do you mean 13 million shares? Normally it's like 5 million shares or so. Let's go see what it's done. It's done 963,000 shares, nearly a million shares. Not too bad in a half an hour worth of trading. What the Diamonds are doing is they're trying to get up into the swing point here from December 26. Only 2 million shares up there. Of course, that was a lightened trading session. So really tough for us to truly gauge volume as price hits that swing point. The low of which is 180.19, the high of which is 180.71. So far, intra-session high is 179.64. That is where the Dow is headed to. If we go take a look at what's going on inside of the SPY, the SPYs out here for the S&P 500, that's got 17 million shares to the upside. The SPYs also trading now. The SPYs have gotten into the swing point. There they are. They're inside that December 29 swing point, the low of which is 208.14. That has volume of 80 million shares. You've done 17 million shares. Again, I don't know how we're going to really gauge volume here because of the holiday trading period. Instead, we're going to more likely gauge price than anything else along the lines out here. Expect the SPYs to go test 208.97. Right now, the intra-session high has been 208.42, so not that much further to go. And then if you see a test of that area and they close below it on lighter volume, I don't know. I think it's just still a bit too early out here. Yeah, but I could be wrong on that account. It could be. It depends on how the trading session actually ends up today. You got to see maybe a bearish reversal signal or something along those lines. But expect the SPY to get up there and test that, whether it's today, whether it's tomorrow, whenever it is. Let's go take a look at the Qs. So you got the diamonds and the SPYs are going to go test their swing points out here. The SPY's already trading inside it. The IWM is trading inside its swing point as well, has been for days. That's been giving us a signal. We take a look at the Qs. What have the Qs done? The Qs broke that descending trend line. They did that on February the 10th. They moved up above horizontal resistance yesterday, albeit with light volume, 20 million shares versus 35 million shares. So far today, you've got 5 million shares in the first 40 minutes of trading or so. And you've got the Qs that are now testing. Looks like they've tested the low, perhaps 105.73, the high so far today. No, 105.69. So you got just, 4 pennies away from testing its swing point here from November 28th. Probably this is where, no, even November 28th, for goodness sakes, that was the day after Thanksgiving. So we can't even use as a benchmark the swing point inside the Qs from November 28th from a volume standpoint, because you're going to have more volume. Well, you're likely going to have more volume out here than the trading session November 20th, but anything could happen. Anything can happen. What you got to expect is that the Qs should go test the 106.25 level. Right now, trading at 105.65. If we go take a look at the Russell 2000 via the IWM, the small caps out here. What are the small caps doing on a daily chart? Well, the daily chart, that swing point is December 31st. That high is 121.41. We've been trading into that. We've seen a close into that. We've seen a rejection of that. Well, now you're into it. 35 million shares there. You've done 5.4 million shares so far, 45 minutes of trading. That says pretty good volume. That says a similar volume if, in fact, this pace were to hold out. What the IWM is going to go do is test the 121.41 level. That's up about 90 cents from where it's trading at right now. And that's what's going on inside of those ETF structures. Everything looks pretty good in those ETF structures to the upside. We got a little bit of divergence out here. That divergence is you don't have the euro, Japanese yen. Totally. Well, first, it hasn't fallen apart, so that's okay. It's been trading a bit lower out here. It's trying to break through, this little sideways action that it has. It wants to go at least probably get up to 137.65. That's its 0.382 retracement off of the high from December 8th down to the low on January 26th out here. No reversal signal or anything along those lines here inside this currency pair, but this is where the struggle is, because this is the true liquidity. You get liquidity that comes from really two places that we can look at on a stock chart. Well, first, this is the currency. So this is where it's coming from. And when the market trades in the opposite direction of this, it's never a good thing. Long term, it's never a good thing. Short-term divergences, those can last for a bit of time out here. Do we really have that divergence in place today? Not necessarily when you consider put the yesterday's candle with today's candle, and it makes sense with regard to the trading over the course of the last couple of days out there. If we take a look at that VIX index, another liquidity gauge out here, we can see well below the 50-day exponential moving average. 1753 happens to be that number. It's trading at 1606 as we speak right now. This is on its way down to about the 14 level out there. If you are trading inside one of those volatility index ETFs, or ETNs, most of them are ETNs out there. Those are dangerous vehicles to trade anyways, because the reality is that they're, the net asset value, the underlying instrument that's in there, it's made up along the way out there. At least when you trade an ETF structure out there, at least you've got the underlying assets, that supposedly make up that trading vehicle. In any event, my whole point here with regard to the VIX is this is likely to get down into the 14 level. It's only at 1609 right now, so be careful if that is what you are trading out there, because I believe that the market will continue to kind of gradually move higher, and the VIX will continue to move just a little bit lower out there. If we take a look at the summation index out here for our three indices, our Dow, our NASDAQ Composite, and the New York Stock Exchange, we're going to see that the price oscillator making higher highs as we speak right now, taking out the highs from February 5th with regard to the Dow. That's always a good scene out there. You like to see those price oscillators make higher highs versus lower highs while prices moving up. That says a pretty good chance that the highs will get taken out, 18,103 inside of the Dow, or at least that is the message as we speak right now. Of course, when that price oscillator gets above zero, if you're watching us on Tiger TV, you can see the center portion of my chart. Maybe I'll just expand it just a bit. Here is the summation index, and that is a lagging change in trend tool. But hey, it is a really good change in trend tool. If you just simply traded with this and you decided you were not going to fight the trend, then this would be one of those tools that you would certainly want to take a look at out here. Like I say, it's a lagger, but it is a really good lagging indicator. And as we speak right now with regard to the Dow, so you can get your mind all wrapped around, some stocks that fell off of the planet like IBM, and it's waiting inside of the Dow and so forth. But the reality is, if you were to just get rid of that noise, just use a couple of decent, hey, look, you use indicators all the time. I mean, who doesn't drive a car and use some kind of indicator, right? You use an indicator to go under the hood of your car to hopefully you do this, to take a look at the dipstick, or somebody does, to see what the oil looks like. Is it dirty? Is it clean? Is it full? Is it not full out there? You use an indicator such as your gas gauge all the time to figure out when to pull into a gas station. You use your speedometer as an indicator to know, where, what speed it is that you're traveling. You use your indicators to turn lanes, left, right. What do you use? You use indicators all the time. This is a great one with regard to the stock market. So inside of the Dow, that indicator rising at this stage here, higher highs inside of the price oscillator bodes well for the prices to continue to move higher through the at least the middle of next week, maybe longer, maybe shorter. Let's take a look at the composite. What's the composite doing? Well, as we speak right now, and look, this is as 10:17 in the morning on February 12th out here. All holy heck can break loose by the end of the day, and then that's going to change the price oscillator where it's positioned. But as we speak right now, hey, guess what happened inside the NASDAQ composite? It broke through its highs. It's actually broken through its consolidation. That was a about a 300-point consolidation. The NASDAQ composite is up over the highs from December 26th. Let me see, that's 48.14. Is it 48.14? Is that the number? 48.14. That is the number. So it's up above that level. If there was some real volume inside the marketplace, you could say that the NASDAQ composite could actually move up another 300 points or so. So into the 4,700 level out there. And so you've got a break above its highs. Its price oscillator looking bullish. The bears had the opportunity. They had the opportunity on February 9th. They had the opportunity on February 11th to try to drive it down below that zero line. But guess what? Absolute failure out there. They were unable to do that. That means if you're short the NASDAQ, be careful out here. If we take a look at the New York Stock Exchange, also its price oscillator is back above zero, but we're starting to see some potentially declining tops out here. So it is actually, even though now the New York Stock Exchange is the index that has given us the best signal that these markets were not going to croak to the downside and that they were going to go ahead and take out their highs. Now, is the New York Stock Exchange going to do that? Probably is. It's probably going to try to get up into that November 25th area. So we'll take a look at that when we get back from this break, because right now it's already back up into its highs from December 26th. This is Steve Rhodes, TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 62, S&P up 13 points, Composite up 33, Russell's up 8 points. Okay, so we're taking a look at the New York Stock Exchange before we went into that last break there. So I'll pull the summation index back up on my screen. Now, we remember when we were taking a look at the Dow and we were taking a look at the composite. If you look here at the New York Stock Exchange, right, and I'm looking back here, let me just expand this section up here. I'm going to just do this, make it a little bit easier for you to see on Tiger TV. Okay, so now what we're looking at is we're looking at the summation index here on the bottom of my screen. See how I was making higher highs back here? Making higher highs. This is back in the time frame October 21st through October 31st, and that's bullish action when you see that, and obviously well above the zero line, so the trend was still to the upside. Now, when we saw that, the market continued to move higher up into the time frame here of November 25th or so inside of the NYSE. If we take a look at the action this time around here, what we really see inside of the price oscillator, more so a consolidation pattern, just like we've seen inside the markets. Now, what may take place, I don't know how this is going to pan out over the course of the next couple of days out here. So we'll but I know what to look for. I know what to tell you what to look for as well, or teach you what to look for, and so we're going to do that. Now, one of the other things Now, this is what bodes well from a so what I'm saying here is we don't have the same rising price oscillator, and so that's always it's a warning shot. That's all. It's not an actionable thing that you would go ahead and take some kind of action and jump on the short side. You wouldn't do that. You don't have any signal out here. The signal would have been yesterday and today, because the summation index turned just below the zero line yesterday. The signal would have come today. Guess what? You got the opposite signal today. So yesterday was a false start to the downside. And I wouldn't have told you to take a short yesterday anyways. So but what I know is for us to focus on and pay attention. So I'm looking at both the summation index, the price oscillator, what's going on there, and the wider swath of the market. Now, there's a couple different things with regard to the wider swath of the market out here. I'm going to put this chart up on my screen, and this shows the advanced decline line out here. And sometimes it's important to be paying attention to this. Not all the times, but sometimes it is important to pay attention to. So if we take a look at that right now, here it is on my screen. What we're now starting to see potentially as the New York Stock Exchange start to drift higher up on the, and you can see it on my other chart a whole lot better, but it's starting to drift higher, make higher highs, while and this is the all-time highs, by the way. So the advanced decline line, as people were talking about, the Dow was struggling and had problems, and the Qs were having problems, and the SPYs. I'm like, hey, hello. Wait a minute here, guys. Let's look at the 3,000 stocks, 3,000 plus stocks that trade out here. Its advanced decline line was saying, I'm motoring along without you. And that was what the general market was telling us, as was making higher highs. So the key is, this is a divergence to pay attention to if it pans out. We're not there yet. Well, we might be, and it's something to be paying attention to. So even today, with regard to the New York Stock Exchange, making highs above where it did a few days ago, unless it makes a higher high. Now, this still bodes well, I believe, for the spring fling, which is what the market is going to throw at each of you. So those of you that are starting to lick your chops and say this market is going to go south, I'm telling you, not a chance. Is there going to be some pullbacks? Yeah. Is there going to be a retracement? Yeah. But is the top end like for the year? No chance. Absolutely none. Of course, that means there's maybe a smidgen of a chance out here, but I can tell you that all the indications are saying no. That what we're going to see here for the next several months, we're going to see markets worldwide that are going to break out. Now, I'm not talking about fundamental stuff out there, whatever's going on in Euro, whatever's going on in the big Greece fire, whatever it is that you see in your community, all of the other, whatever it is the Fed's going to do with interest rates. And there's people that believe, this is the thing that's always amazing. Now, you believe it because we're fed this information versus actually feeding ourselves, which means doing all of the work ourselves out there. You see, I don't believe anything that anybody tells me until I go back and actually verify, seek and verify. And what I can tell you is we can go back to points in time where interest rates rise and the markets also rise. So all of this hubbubaloo, all of this BS, all this before Steve stuff that says that if interest rates rise, the markets are going to crash out there. What the heck are those folks looking at? It would actually be, somebody would say there's such a correlation that it can't happen. And I'm here to tell you, go do the work yourself. You're going to find out that is not true. That's just like the folks that are saying that the market has to go higher and because oil, if oil's going lower, the market was going to crash too. What were those folks smoking? This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 52, S&P is up 12, Composites up 33 points. So during the break, it was a timely break out there. I just went ahead to my chart out here. I'm going to put this up on my screen. So just to really prove my point that, the stuff that is spewed out on the stations out there, I can't blame the folks that are just simply paid to read a teleprompter. They're very good at reading a teleprompter, and being able to multitask. Not an easy thing to do out there. And, they're not the ones that are doing the research out here. But the reality is, and that's where, like I said, I don't believe anybody until I go back and actually check and verify. And you should really do the same. It doesn't even matter if I'm saying it to you, but I'm just telling you that with regard to the work that I do, it's because I, look, anytime whatever it is you're doing in life, you love to do it. First of all, it doesn't feel like work. You actually enjoy doing it. It's kind of like, I'd like to be like that MacGyver guy, or you'd like to be Indiana Jones. Every day that you and I are living, it's our own movie that we are creating out here. So it is, you be your own Sherlock Holmes and actually go out there and look for clues. It's amazing when you take a look at the technology, when you take a look at we have tons of information. The question is, how do you sift through that information to find out what is good, what's actionable? It's like last night, the workshop that I did. It's not a BS workshop. Well, it was all before Steve. People have changed their mind with regard to how you would utilize a set of tools. I gave them 5 very specific tools to use that actually dispels a lot of myths. I mean, some myths out there that, I know folks were at the workshop last night because it's all, I go back and I do the work and I verify it for folks so that they can take a look at it. And you can get access to that. It costs you nothing. What it costs you is taking a little bit of time to go over and just simply sign up for my newsletter. It gives you access to me for the next 30 days. If you want, there's no cost. There's no charge to your credit card. And it gives you access to a great workshop, but kind of a once in a lifetime workshop. I don't think I'll do that workshop again. So, you snooze, you lose kind of thing. And it's stuff that you can use for the rest of your life from a trading, from an investing standpoint. So you really should take TFNN. You should take me up on that opportunity. Now, if we take a look at this chart that's on my screen, the top portion is the 10-year Treasury yield. The center portion is the 5-year Treasury yield, and the bottom portion is the S&P 500. And, just go back to the 2003 timeframe here, where we can see the Treasury yields were moving. They were trending higher out here, 10-year, 5-year. And take a look at the S&P 500. It was trending higher all the way up into 2006 out there. So there are periods of time. You come back here in the time period of 2008 where Treasury yields are moving higher. Our markets were also from the March of 2009 timeframe. They were moving higher. There are plenty of time periods. There are as many time periods where yields move higher and our markets move higher as there are when markets move down. And, so the direct correlation there, it's BS. It is. It's 100%, for who, it's as if folks are trying to scare you away from getting into the market, continuing to put money into the market, continuing to trade or invest out there. Just do the work yourself. And it's just like the same chart when you go take a look at the oil charts out there and things of that sort. Now, one of our folks in the den mentioned Marty Zweig. He said, I said after the third rate hike is where it becomes an issue. I don't know that that's even the case when we really take a look at these charts out here. But let's just do this. Well, he mentioned Marty Zweig. Now, I haven't updated this chart here for a while, but Marty is passed away, a few years ago. But he created what I think is one of the coolest indicators out here. It's called the Zweig Thrust Indicator. Now, I won't say nobody, virtually nobody keeps track of this. Stevie does. And the reason I do, it's such a great indicator at calling major bottoms out here. It's only an indicator that's actually actuated. It's only taken place the last 40 years. We've only seen like 4, maybe 5 now times, and now we've seen 2 of them just in the last couple years alone. The first one that we saw out here recently was back in October in 2013. Now, this is a major bottoming signal. In order for this signal to execute, it takes a huge momentum move out there inside of the markets. We got one back in October of 2013. We came real close after the lows in 2014, but we got a nice signal here back in October of 2015 at the lows out there. So it's just another indication and a reason when you take a look at consolidation patterns, you take a look at everything that is going on in the market. If we just follow the patterns that are out here, if we don't try to second guess all the reasons why things ought to fall apart, you can go back to time. People can scare the heck out of you about what the markets are or aren't going to do. Let's just pay attention to the signals. And look, I'm not saying the markets are going straight up. I am absolutely not saying that. I'm not saying that you can't trade them from both sides, because you can. You just got to get your time frames right and what it is that you're trading out there. But longer term, the S&P 500 is going to 2350, 2450. The NASDAQ composite is going to go back and test its highs from back in 2000, maybe even break out of those. The Russell 2000 is going to get up to 1350. Russell 2000 right now is trading at 1210. It's got another 140 points plus or so to go. Is it going to occur this year? I don't know. It could. It could occur between now and July, for all I know. I just know that that's where the markets are headed to. Let's go out to Wilmington, Massachusetts, to Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Hey, Steve. How you doing?
Excellent. Thanks so much for asking. VZ, Verizon, is the ticker symbol you want to take a look at. Tell us what you're doing and how we can help you.
I just want to tell you I'm a long-time listener, first-time caller to you.
Thank you.
And thank you for your quick response on the wheatgrass.
Hey, no problem. My pleasure. My pleasure. Now, have you done wheatgrass in the past?
Yeah, I haven't done it like you've done it. You know what I mean? I've done like super greens or something like that. You know what I mean?
Yeah.
But I know it's really good for you, and it is a lot of work to actually get it delivered and juice it, and I know it's really good for you, though.
Yeah, it is. Look, all I can do is, you can only just pull from personal experience. The only time that I have been sick was when I got food poisoning. I had a bad oyster a couple of years ago, and your alkaline body's not necessarily gonna help that out. But I take they've got these pH strips. So there's like people that necessarily, and when I tell them about it, they're kind of like skeptical that you can actually go ahead and change the alkalinity within inside your body. And so we'll take those pH strips, and you can either do it through urine or you can just do it through saliva. So if you haven't eaten anything or haven't had anything to drink recently, you can just test your saliva. And I actually bought a living water machine. So there's different kinds. I got one from Japan because I think the water that you put into your body is probably just as important or more important than actually even putting the having a shot of wheatgrass every day. And the combination of those two things, because that helps to change the pH of your body, is I think are some of the two best things that you can do out there. So, hey, my pleasure to respond, and thanks for even sending an email. And thanks for listening.
One more quick thing before we get to that. I just want to make.
Yeah.
I am doing the lemon juice, and I am doing the apple cider vinegar for the alkalinity.
Oh, so, good.
Anyway, without boring the listeners, let's get back to the stocks.
All right.
I am in VZ. I am an employee of the company, and just kind of wondering where you think. It's had a nice little run here since they announced the sale of $15 billion of assets the other day.
Yeah. Look, Verizon's got some really good support, $4 below where it's trading at the 45.08 level. So as long as Verizon holds that area, you're in pretty good shape. And I was just taking a look at a weekly chart for you. With regard to the daily chart, now, so you're into it mostly through your retirement account or just other? Okay, yeah.
And I did transfer some money in around 46, so
oh, great. Okay.
When it was going down there.
Yeah, from a volume standpoint, it's broken. The positive is that this thing had a downdraft with some volume back on December the 9th. There were 49 million shares, and when it closed that little gap down that window, what's really nice about this is it did it with 48 million shares, 47 million shares. So that level now, your support. This on a daily chart, short term, should really be down at about the 48.56 level. But because you're in this from the longer term haul, it's really a matter of, what's the monthly chart show us when we take a look at Verizon out here, and what you would like to see it do really is break above these its recent highs from back in 2013, April 2013. Your real goal is to see this thing break above 54.31. And if it can't do that, then basically, Mike, what this is just in a sideways trading range between the 54 level and the 45 level inside of Verizon out there. If this can break above that, then I would just simply utilize just a normal retracement tool just to get an idea of where the floors are in this thing. And it would say that Verizon ought to move up to about $60. 59.56 is the exact 0.786 retracement. But nice trend off of the lows back in 2008. I don't see anything that is as long as it holds that $45 area right now, you're just really in a sideways trading range. So adding at the $46, that was a smart spot to do that.
All right, buddy. I appreciate your input.
Hey, my pleasure, and thanks so much for calling, and best of luck to you. Look, the great way to disguise, if you do get that juicer, the great way to disguise it, I've found, is put in some ginger.
Yeah.
Put in a little bit of ginger. It's nice and spicy. That's also good for your body out there. And just do it every day. You'll see some big improvements out there. Mike in Pennington, New Jersey. I mean, there's no better testimonial than a person that was dealing with life and death circumstances and searched out a way to be able to extend his wife's life out there. There's really no better testimonial than that.
No, and it was, like I said, great to hear you guys talking about that. And I do believe in the pH level of your body. I do believe in that.
It's funny, I talk to people, and there's folks that will say, or there's even stuff you can read on the internet to say that it's all hogwash. Now, a lot of that stuff, you don't know who posts it. Is it the medical community? Who is it that posts that? My take is that, show me something where it says that it hurts you.
Right.
And then you just walk around. I mean, now look, you're up in Massachusetts. You probably can't walk outside and see too many things that are green. But you will, right? Spring's coming. That snow somehow is going to melt, at some point in time. I know that I look out the windows. I walk outside all the time, and you've got all this green out there, and you've got all this sun. And so, you get some nice wheatgrass with some good minerals in there. You're getting 98% of all the minerals that your body needs. I mean, how good is that?
Well, let me just say one thing. When I first got involved in it was, if you think about like a cow and horses or whatever, all they eat is grass. Yeah. And their bodies can actually filter it out where ours can't. That's why we have to juice it. So look at the muscles that they have on their body. I mean, that's what they eat, right? I mean, I'm talking any animal that just grazes on grass. Well,
here's the thing. It's hard to argue with logic, and you make a really good logical point out there. So, you're absolutely right. Absolutely right.
All right, buddy. Thank you.
Hey, you bet. Thanks so much for calling. Thanks so much for listening.
All right.
That was Mike in Wilmington, and we were taking a look at Verizon, of course, talking about somehow we got into the wheat grass today. And folks, if you haven't tried it, really, first I'm going to tell you ahead of time. This way I can set a low expectation, and that's with regard to the flavor and the taste out there. But it's a shot. You chug that thing down, and I say you just have a little bit of peanut butter, or a little bit of almond butter, or a little bit of cashew butter, or something like that. And you go to the Whole Foods marketplaces, for example, most of them actually have the machines where you can you can make fresh butter yourself. So go to the counter, go to the their deli counter, and they got those little white cups out there. Go get one of those little white cups. Turn on the peanut butter machine. Just get a little scoop in there. They're not going to go out of business because you've done that. And then go to the juice bar and get them to make a single or double shot of wheatgrass with a single shot of ginger in there, and swig it down. Put the peanut butter. You won't even taste it, and you will you'll improve your health. But you got to be consistent about it. Doing a shot every now and then is not going to necessarily, probably do you a whole lot. And it's way better than the powderized stuff. You want to get real with it. In any event, back to the markets out here. So we really covered the the Zweig indicator. What I haven't done for a while with each of you is take a look at the longer term charts, just so you know where it is that what the charts are communicating. This isn't my view or my opinion of what the markets are doing. At least I don't believe it is. It's just nothing more than me saying, hey, let's go take a look at the stock charts. Let's look at patterns that exist out here, and let's just draw conclusions. And one of those conclusions is going to come from the S&P 500. Remember, at the beginning of the month, as we began the month of February, what I pointed out to you is the same pattern that makes the highs typically inside of the S&P 500. That's where these are the highs that were made back in 2000, the highs here in 2007. Price moving higher, doing it with less relative weakness, but you've got to have a bearish reversal signal, and you need to have follow through. Well, when we ended the month of January, we got that signal out here. We got the bearish signal. We got the evening star, but no follow through. Now it's only February the 12th. All right, so anything can happen out there. So we get back from this break. Let's go take a look at those long-term charts, the S&P, the Russell 2000, and they'll tell us where the market is headed. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You know, there's nothing like terrific Thursday around here at TFNN. You got the entire crew. We got Basil Chapman. He's in the on-deck circle. Then after Basil, we go out to Arizona to our man Larry Pesavento. After Larry, we've got Daryl Martin. Then we've got David White, the Tom O'Brien Show from 3 to 5, and Andy Heck to bring it on home. Great Dave Mason, too. Now, we were talking about, we're taking a look at the S&P 500. So, you know, this is a monthly chart. We're early into the month out here, so anything can fall apart, anything can take place. Now, the signal that we got last month, let me blow this up on the screen here for you, and I'll just move this over, make it a little bit easier. Price on the monthly chart, we got price moving higher, doing it with less relative strength out there. Never a good sign when it's accompanied with a bearish reversal signal, which took place over the course of the last 3 months. That was November, December, and January. But as we speak right now, that entire signal is being abated. And any move above the highs out here from November inside the S&P 500, any close above that level, whether I'm looking for a pullback or not. So I'm just setting the right expectation, right? I'm suggesting to you that what's being communicated to both you and I when we take a look at these markets are that they want to run higher. I'm also suggesting to you that the market's going to make a intermediate term top. So I think I've been pretty clear with regard to my expectation. That way, when you start to see that intermediate term top, when you start to see the market pulling back, whether it's next week or the end of this week, tomorrow, whether it is the week after, that I've already set that expectation. Now, that's the expectation where the charts also suggest, like the S&P 500, which had a 16-year 800-point consolidation, and says that the measured move of that consolidation should take us to 2350. That's where the S&P 500 wants to head to. So everything out here still continues to point to that being the case. And we get some other information, and we'll go ahead and we'll take a look at it, and we will assess it. If we look at that New York Stock Exchange, kind of the easiest one for us to let us know whether or not there's real trouble out there. And that trouble line is at a price point of 10,387. You see, what the New York Stock Exchange has been doing is traveling in a 11-year 6,200-point consolidation range, which it broke out of back here in the early part of 2014. And back in October, when the market was pushing lower, guess what? It broke out of the consolidation. Price came back and tested it and rejected it. It rejected it in a big way. It rejected it again back in November. So there were opportunities for sellers. There were opportunities for bears to break through that level. So this says New York Stock Exchange, hey, longer term, now this is way longer term. Longer term, 16,500 is what it has in store for us. But its next move, within the course of the next 12 months is probably 12,185. You're at 10,959. If we see a close back below 10,387, that is going to signal to us that, okay, all these consolidation patterns and everything else, that's off the table for the time being. But not until we get to that stage is there any other message different than we have seen a breakout inside the New York Stock Exchange. And we've seen that advanced decline line move to higher highs. Everything out there actually looks pretty darn bullish for the NYSE. It's not anything that just happens overnight. You can expect, moves. There's going to be both sides of the trade that everybody can play out here. And those are the opportunities that you're going to be able to use to put together to work for you. So, folks, it is terrific Thursday as always. Thanks so much for joining us here. Don't forget, if you didn't get in on the workshop that I did last night, come on over to the homepage at TFNN.com. You can still sign up. You're going to get that workshop. It's going to be available on your members page. You're going to have direct access to me, whether that's by phone, email, Skype, whatever it is, so that I can help you understand completely the information that we went through last evening. These are tools of a lifetime. You're going to want these in your arsenal. As Basil says, you're going to want those in your Sears and Roebuck toolbox out there. So stay tuned for Mr. Basil Chapman. Have a great Thursday, folks. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.